What's up? It's your boy E White. Check this out. Today I'm gonna go over a small little technique that I use. It's called a correlation strategy. So at the top, you see I got the US dollar Canadian dollar on the 5 minute chart, and then I have the US dollar Japanese yen on the 5 minute chart. Now, what we want to do is let's go back so I can show you something. And let's see if I'm able to do it on two. Let's do a bar replay. All right, and we're gonna go back to here. All right, so at the bottom, you see that we have a bar replay. As I was looking at the US dollar Japanese yen, I noticed that it was a sharp drop in the market. So it's like, typically US dollar Japanese yen and the US dollar Canadian dollar, they follow the same, they're correlated. So, and the reason being, US is the, considered the base pair. So the US dollar is going up. Of course, we know in Japanese yen or Canadian dollar is going to represent all the red candles, bearish candles, whatever case you want to call it, right? Now, since they're correlated, one of them can give a snapshot of what's going to occur with the other pair. Typically, the US dollar Japanese yen, because it has more volume and more people trade it versus the Canadian dollar, it gave me an insight of what is probably going to occur. So as soon as I saw this drop, I said to myself, all right, and now I'm gonna have to do a replay. Let me see how I can do this. All right, so I don't think I could do a replay on both of them simultaneously. So you see down here at the bottom, all right, we had this nice little drop, but look where we're at right now. Okay, this is where we were when this was happening. Okay, I opened up a sell order. Okay, I went short and I was looking for at least price to come back to retest this structure. And this is where my take profit would have been. Now, because I had a call on, I went on ahead and closed out for about $323 profit or whatever. But if I would have held on, of course, it would have been magnificent. But I didn't, and I got caught into a business meeting. So it sort of, I didn't get to capitalize off the whole entire trade. Now, what you notice was right here, and of course we made our way down. We retested. What did we retest? Structure, right? So this right here, let's go ahead and use this. This was all right. We had support, came back, retested, drop, came back, down. Of course, this was my level where I wanted to take the trade to. Of course, it blasted through that. Cool. Money was made and then get it to the exact place I wanted to. But that's okay. It's always ways to make money in the forex market. Now, this correlation. Remember, this happened first. This had not happened. Even though it doesn't look like it was just was a flash crash down, still we feel that price was going to come down and still cover these areas as well, which I would have had that as a target area to where I at least want to get out of the trade because we're going to be retesting some market structure. We get down here, we blast through that. Okay, now because we blasted through, I also can have we have a higher probability of blasting through this one as well too. All right, so I'm just gonna go ahead and speed this one up to get it back to where we need to be. Um, let's see. Let's go ahead and get out of that. Let's cancel this out. All right. So you see where we at. We get down here. We come back up, retest, and we back down. Now, same thing. We get down. We drop. Maybe we're gonna come back up here and retest this area before dropping beforehand. But you clearly see one came before the other, and it was able to give us an edge. And a lot of times I use this technique too um, in crypto futures. Sometimes there are cryptocurrencies that I actually move 15 to 20 seconds early then the others, and then the others will follow. That's eternity when it comes to trading, especially scalping, where I can see a pattern shaping up and I can say, okay, it's just doing this. Let's look at these uh, projects over here. And sure enough, they will emulate those same type of moves and patterns. Okay. So, yeah, this is a technique. It's something I've developed over the years because I just have a knack for looking at certain patterns and catching certain types of correlations or whatnot. But um, try your US dollar, Canadian dollar. You can go in different time frames and just see if one has some characteristics that the other does as well, and see which one is really playing out. All right, so that's something you guys can play around with, and it's not going to always be perfect. So you also want to use true technical analysis, and don't just rely on it. But it can really open your eyes up to some things that are happening in the chart. All right, now where we at now? Look back down here on this yen. We're getting close back. Well, yeah, we're already there. We're back at what market structure. So some people, a lot of loans just got liquidated, and now I'm willing to bet we're probably going to have a lot of people going short, and they're going to get caught too. So this could reverse. All right, so I would be a little bit careful with just jumping in based off of that. We're both on 30-minute. All right. Yep. So we still have some room to come back up and visit some of these areas or even go higher. All right. So that CPI data came out and done that. Now in the equities market too, we're seeing some folks get wiped out, and then both sides get wiped out. At that, we'll look at that right quick. But look at some sentiment. Right now, we got the all right, CAD 66% short. So still with 66% being short, I still feel like the market still is going to go bullish on that. So I wouldn't get too caught up on those shorts. We're probably going to push higher. Over here, we got 59%, almost 60% are going long on the euro. So we're probably going to continue seeing some downward moves on the euro as well too. And look at this. So the US JPY, 83% was short. Now y'all saw what happened to it this morning. Like they just all those shorts just got slaughtered. This little move up, of course, we know it's because of CPI, but this could also let us know we're probably going to continue pushing up a little higher. Right now, the shorts got destroyed. Now people are going short again, but they're probably gonna get destroyed again. So this little move up, maybe got some longs. My longs are trying to close to get out, but this is a key area where price is at right now, and I would eye on that as well. Sorry about that. All right, so that's that, and let's go look at the S&P 500. All right, so yeah, we had that catastrophic drop, but look at this big rally. We do have a gap right here. We could come up here and close that gap, but I would keep an eye out on that. The dollar's still strong, so you could start seeing some sell pressure come back in. This is clearly just a liquidity grab. This is really just knocking out people. Derivatives is the king of all markets. It's quadrillion. Yes, it's a word. Go look it up. All right, so quadrillion. All right, how big is the derivative market? Look at this, guys. We're talking about estimated over 1 quadrillion on the high end. That's large. So derivatives is king of markets. All right, that's options, futures, forex, whatever. Right, all those leverage type products. They're huge. People make a lot of money off of that. So you can expect markets to be a liquidity eating machine. That's what it's designed to do. It got to go get that paper, and clearly, this wiped out. People who was in short, who kept going short, and it just got wiped out, liquidated. But like I said, I feel like that dollar is still too strong, so we still probably may see some downside pressure or whatnot. But also keep an eye on this little gap, these gaps right here, um, especially this one right here. It's a huge gap that's just being left open as well too. All right, but that's it. Hit the like button, subscribe. It's your boy E White. I'm out. Peace.